Hello, everyone. This is Denise Hancock. I am your instructor for Nursing 681, and I'm here today to give you an overview of the course content and to dive into some of our first topics. What we're going to talk about today is just a really broad overview of healthcare economics and finance. But before that, just a little bit about me. My first bachelor's degree was in the field of economics, and I started off my career working in banking and finance. I started working at a very small bank in rural Oklahoma in the trust and investment division, then moved to Tulsa and later New Orleans. And my primary area of business was working with small business owners in order to set up retirement plans for themselves, their employees, and also doing some estate planning. About 2003, the company that I was working for sold the business unit. And so I had several months to decide what I wanted to do next with my life. They were willing to pay for some career counseling and give me a severance package. At the time, I thought the field of healthcare looked really interesting, and Louisiana State University had just started a accelerated bachelor's to BSN degree program. So I decided to use my time to pick up some prerequisites at the local community college and apply to LSU. I did get in and I started the program at Louisiana State University. And of course, 2005, in the middle of my program, Katrina hit. So I wound up transferring to Oklahoma City University and staying near family for a while after the storm. I finished my BSN at Oklahoma City University, and then I became a nurse. My first nursing job was in the high-risk OB unit at OU Medical Center in Oklahoma City University. And I really loved taking care of families who had either high-risk pregnancies or they had some sort of a medical or surgical problem that caused them to be back in the hospital during the postpartum period. While I was there, I wound up getting a scholarship to the University of Oklahoma for a Master of Science in Nursing program, where I was able to focus on nursing education. I then started teaching while working part-time at University of Central Oklahoma in Edmond, because my scholarship requirements were that I teach in Oklahoma for 2 years. So once I finished that, I moved back to New Orleans in 2010, where I became employed at William Carey University. I first started teaching on the New Orleans campus while that still existed, and then later taught in the hybrid RN to BSN program and the master's program. Meanwhile, I became the program director at the Tradition campus for a couple of years, and then left that to go to work as a manager. I was director for nursing professional development at Oxnard Medical Center in New Orleans. So I've had an interesting career spanning finance, healthcare, education, and a lot of the roles that I've been in have been directly responsible for budgets and financial decision making. I've also served for 3 years, 3.5 years, as the treasurer for the Louisiana State Nurses Association. And so I really learned that nurses at all career levels don't know a lot about healthcare economics and finance. So I really love teaching this class and also one at the PhD level, while I introduced you to some basic concepts that I think will really help you understand healthcare as a business and also how to get things done in your own life and in your organizations. So this is kind of a love child for me teaching this class. I am an adjunct instructor these days and work from a home office in New Orleans. So I don't check my email every day. I do try to check in every 2 to 3 days. And I have put my cell phone number in the course announcements. I encourage you to save my cell phone number to your phone. And if you need something urgently, please do text me. Either ask me the question by text or say, hey, could you check your email? And I'll be happy to do that. I am keeping office hours on Monday evenings, so you're also welcome to contact me through Canvas or email anytime, or make an appointment if that works for you too. I know many of you have full-time jobs. That's enough about me, and I look forward to learning more about you in the first week of discussion, where I ask you to respond to a few personal questions. So, what am I here to do today? I want to talk to you about just some of our early course objectives. Today, we're going to talk about concepts associated with economics, with finance, and with accounting. I want you to understand the difference between the three. I'll be talking about some key terms in healthcare economics, and I want you to understand what healthcare economics can do, how it can contribute to health outcomes, and then also what are the limitations of economics and finance in general in terms of solving our healthcare problems. So first of all, I just want to start off by talking broadly about economics. I come to you with an assumption that most of you know very little about the field of economics. Like I said, that was my primary field of study in my first bachelor's degree program. I really loved it. Like psychology or sociology, it is a social science. And the purpose of economics is to study how goods and services are produced, how they're distributed, and how they're consumed. And so the field of economics asks this basic question of how should we allocate resources in order to best satisfy human wants and needs. There are some key assumptions. I know if you've ever studied nursing theory, we always talk about the basic assumptions of a theory. And in classical economics, which is what most of our systems are built upon, there are some key assumptions put forth that I think it's important to understand. The first assumption that's made is that resources are scarce. Essentially, that as humans, we have unlimited wants, and there's only a finite amount of goods and services available to meet those wants. The second assumption is that every resource, or most resources, have alternative uses. For example, if you think about the resource of, I'm in Louisiana, so sugarcane, right? Sugarcane can be used in a variety of ways. It can be made into all sorts of products. In the healthcare environment, one specific resource is that of nursing labor, right? And so if a person has labor to offer, they might choose to be a nurse, they might choose to specialize in something, or they might choose to change and use their labor in a different discipline altogether. The third assumption is that human beings have different wants and priorities. And essentially, what's important to me, what I may want most and want to spend my dollars on, isn't the same thing that you might want most. Some people really like to buy expensive and valuable clothing and accessories. I had a lot of nursing friends who loved Coach purses, for example. I don't care to spend my money on that sort of thing at all. I would much rather spend my money going on a fantastic trip. I really like to have experiences, travel, restaurants, etc., memories rather than objects. But we're all different. We all want different things. The fourth key assumption, and this is probably one that as nurses you might take issue with, and that is that humans behave rationally in their own self-interest. So given good information, we will make decisions that are rational. And of course, we know that that isn't always true, that sometimes humans, in fact, do things that are not necessarily in their own long-term best interest, maybe their short-term. But as you think about economics and how the science of economics works, there are other views, but in this classical theory, these are the four key assumptions. And so keep those in mind as we talk through some of the key concepts later. So essentially, given that resources are rationally allocated, we should have marketplaces where you can buy or sell goods and services that are free and efficient in order for the open market system or capitalism to work. And in order for a marketplace to be free and efficient, then the people who are buying and the people who are selling something should have access to the same information. We call this a perfect symmetrical market, symmetry. And therefore, the resources, the products and services, should be allocated by price and by ability to pay. So the price would be determined by the market, right? It's where buyers are willing and able to pay, and the sellers are willing and able to sell. A simple example of this might be, the little farmer's market stand on a corner somewhere in a rural area. So perhaps you have a farming family that grows some vegetables, they grow some fruits, they have chickens, maybe they have some eggs to sell, and they set up a little stand. It doesn't cost them anything. And they list prices of what they want to sell their goods and services for. In this case, goods. We're just going to use eggs for an example. So maybe there's a sign posted, hey, a dozen eggs is $6. So a buyer comes down the street and they talk to the farmer and they're like, hey, I'd really like to buy some eggs. If I buy 2 dozen, would you give them to me for $4 a dozen? And the farmer says, no, but I will make you a little bit of a deal. I'll give you $4.50 a dozen. And so the buyer and the seller settle on a price. And there's kind of no third parties involved, right? There's no real regulations going on. There's no additional cost to the buyer, no additional cost to the seller. They both have information that the eggs were, say, freshly laid that day from the farmer's hens. So this is a perfect example of a free and efficient marketplace. So when it comes to healthcare, we have a lot of what I would call, an economist call them, market failures. What happens when you either have too much inventory of something you're not using, or you don't have enough? We've had so many inventory shortages of really basic medications and supplies in the last several years, as well as shortages of staff. Or maybe we have plenty of one kind of healthcare worker, but we don't have nearly enough of another kind. So essentially, these are all market inefficiencies where there is not like a free, efficient market where suppliers and buyers can come together. And as you can probably imagine, our healthcare market is really anything but efficient for a number of ways. And we'll talk more about that shortly. But there's all sorts of costs to entry for buyers and sellers, as well as a large lack of available information. So we talked about the key assumptions of classical economics. And what I want to do now is say that there are some other views available, and that we even may see some like hints of those views in our history and in the way we operate in certain kinds of marketplaces. So instead of classical economic theory, one particular view is what I would call the romantic view. And this is where there is sort of a denial that resources are scarce or that there's any need to choose. And so this assumption says essentially that we have all of everything we want available to us. In some ways, I think at the political level here in the United States, our politicians sometimes operate on that romantic view. They sort of deny that resources are scarce, whether you're talking about healthcare or the federal budget, or that there's any need to put limits or choose. And so they just say yes and yes and yes. And yes, you should have a right to all the healthcare you ever want. And yes, we should be able to buy all the things we ever want. And there's no need to make choices. Another review that is an economic way of allocating goods and services is what's called the monotechnic view. And this is a very paternalistic approach. And what it essentially says is this group of experts, or an expert says, what you want doesn't matter. I'm going to make the decisions for you, and I'm going to give you what you need. And so it's a way of denying diverse human wants and priorities, and instead there being like just some sort of a mass distribution based on the authority of some higher expert group who makes the decisions about what's appropriate to be allocated. The third different view that I wanted to introduce you today, and this is probably my favorite one, is called behavioral economics. and it really comes to us from the field of psychology. So essentially, it combines psychology with economics to study how people actually do make decisions. What are our biases? What are our errors in judgment? Like, how do we choose between two things? And I think behavioral economics really offers a great deal of insight that can be helpful to us if we want to help people have better health. An example that I like to share is with organ donation, for example. In the United States, the way we handle organ donation is that essentially it's assumed that you are not an organ donor unless you specifically have opted in, like whether that's checking the box on your driver's license or putting it in your advance directive or notifying your family. If somebody is in the state to be an organ donor, unless they've taken some positive action to affirm that that's what they want to do, it's assumed that they don't. On the other hand, in many countries in Europe, they've used what's called these nudge principles to help people do the right thing, if you will. And so their approach to organ donorship is very different. You're considered to be an organ donor unless you do something to opt out. And the reason for that is one of our consistent biases as adults is we simply don't like to fill out paperwork. We kind of have inertia. Companies have also used this same principle now to get people to participate in their organization's retirement plans. When I first started working in banking, if you wanted to enroll in a retirement plan, you had to fill out a piece of paper saying you wanted to be in the retirement plan and how much you wanted to put in it. These days, most employers automatically enroll you in the retirement plan, and they instead ask you to fill out a piece of paper if you want to opt out of it. So guess what? Many more people give organs in Europe, and many more people participate in retirement plans, taking control of this behavioral psychology principle about how humans' biases work, that we simply just don't like to fill out papers. So I think it offers some really interesting ideas in the field of behavioral economics. And I hope it's an area that you will look into later. The National Health Service, for example, in London has this whole team called the Nudge Team that looks at like what they can do to incentivize people in these subtle ways to take actions that would promote good health. So other views to classical economics do exist. So the next two concepts that I really want to talk about are macroeconomics versus microeconomics. The word macro, you probably know, means big in Latin, and micro means small. So macroeconomics is the scientific study of the big economy, the economy as a whole, either at a state level, a regional level, a federal level. And some examples of that are things you probably hear on the news or the radio, things like national income, the gross domestic product, inflation levels, price levels, unemployment rates. These are examples of macroeconomic things. And we're not going to pay a whole lot of attention to these in this class. We're going to focus more on what's known as microeconomics. Microeconomics is the scientific study of factors that affect the decisions and the actions of individuals, of families, and also of organizations, like a hospital or a school or a medical practice. So that's really our focus. And you'll see that most of our topics as you move through the modules are about these microeconomic views. What do healthcare organizations do and why? What do managers do and why? What do insurance companies do and why? That's really going to be our focus in this class. I also teach a course on healthcare policy here at the master's level, Nursing 660. And so some students have asked me before, like, well, how does policy and economics relate to each other? And so this is a little, just a visual I put together to kind of explain what economics is, what policy is, and what the end result is. So essentially, economics itself is a social science, right? It's the theoretical ways that we can allocate resources. And so researchers in sciences, they study things and they write research papers, and sometimes they write white papers. And in an ideal world, which we don't live in, this scientific research would really help us to make allocation decisions. However, in our real world, we have this whole process of politics, of who we elect, what they do, and that's very much often based not on scientific research, but instead on people's values, people's priorities, people's desires to advance their local interests. And so we have this political process that then develops policies. Policies are the end result, whether it's policies that are made through legislation or through the court system or through like a federal mandate or government agencies. But policies are really the end result of a political process in almost all cases. Sometimes they're informed by the science and sometimes they're not. And then separately, we have a financial process in place, mostly also political, that is intended to shape and enforce policy. Although sometimes it doesn't, right? Sometimes we have really wonderful policies and regulations, but our political process is such that those things are not funded, and so they're impossible to enforce. So it really is almost four separate silos. Economics being a science that could help us, politics being the process we use, and then policy and finance are the result of the political process. So they're related to each other a little bit, but probably not as smoothly as we think would be in our best interest. So switching gears just a little bit, I want to introduce you to the concept of finance. And when I say the word finance, oftentimes I go around the room and I ask people what they think of it, of what finance means, and I get a lot of different answers. But it can come down to sort of four different definitions if you look in the dictionary. On one hand, finances are the money or the liquid resources of an organization or an individual, right? So if you think about the money that you have in your bank account, in your investment accounts, you could think of that as being like your finances. Finance is also a term that's used for the whole system that involves how money actually circulates in our economy, including the granting of credit, investment making, and all the different banking facilities we have. So the financial system or the finance system is a very big industry, not only in the United States, but in the world. Finance can also be a social science that is the study of how funds are managed. And then people also use the word finance kind of as a similar word as to get credit, to borrow money. So financing can be how you obtain money or capital in order to pay for something that you want to invest in. So many different definitions of finance. When I use it in this class, I'm generally talking about the study of how to optimally allocate assets. And so finance in most of our organizations is a department that does planning. It's a forward-looking field that's concerned with how we're going to get to the outcomes we want. Accounting, on the other hand, are people who are really about looking backwards. It's the process of communicating financial information about an organization or sometimes an individual, and it's essentially a reporting function. So folks in the finance department are the people who are planning for how we're going to spend money, how we're going to get money, how we're going to invest money, and what we want our profit or losses or net earnings to be over time. Whereas the accountants are the people who go back and look at statements and allocate things into categories and issue reports. So as a nursing leader or a nursing manager, you probably participate in both to some degree. The finance and planning part, nurses participate in, like I said, to a small degree. Usually, a nursing manager has some responsibility for creating or revising a budget, making some sort of simple forecasts about what they expect. One of the things you're going to learn to do in this class is create a business proposal. And so, as a nurse, you may submit a proposal for some desired change. It could be a grant proposal that you're asking an outside agency to finance something, to provide funding for something. Or it could be a proposal that's to your manager or to your finance group in order to change something about the business you're in, whether that is healthcare, academia, or something else. Another thing that's really important for you as a nurse manager or leader to do is to sort of constantly scan your environment to anticipate any changes to the forecast. And if you see something changing where you anticipate a greater cost or lower revenue, or that there's some kind of equipment that isn't working the way it's supposed to, and so it's creating problems in the workflows, then you need to escalate that information to your leadership so that they know what's coming. In terms of accounting and reporting, in many organizations, there's something called a performance dashboard, and we will talk about that a little later in the term. But essentially, it's a way to monitor your performance and see if it's matching expectations or if there's something that's changing. Again, it's part of environmental scanning, but it's a reporting feature. Usually, after you've done a budget on a monthly basis, you're going to get a budget report, and you have to look at where your actual income and expenses was different than what you planned for and explain what those differences were to your leaders. It's also important, I think, for leaders and managers to understand the organization's overall financial position and what the strategy is. So I'm going to teach you how to read audited financial statements so that you can get a big picture sense of what an organization's financial health is its income exceeding its expenses, how much cash is on hand, is there long-term debt, how much are you spending on wages and benefits, those type of things. My personal view is that you probably don't ever want to take a job with an organization without understanding what its financial picture is, because that gives you a sense of, hey, is this a healthy place to be? And also, is what I care about in alignment with what this organization cares about? There's a great quote from the American Nurses Association a few years ago that said something to the effect of, if you want to understand the ethics of an organization, look at its budget. Are they putting their money where their mouth is? And finally, I think the important role of a leader or manager is to understand what's important and to share it with your teams so that people understand when there's budget cuts, why there's budget cuts, and what can be done about it. Or if you're asking people to go out and recruit for you, why is this important? Or, creating a healthier workplace, like, why is it financially important that we retain our staff? Like, not only does it make a better place to work, but there are real costs associated with high turnover. And so being able to communicate those kinds of things to your team so that you're all working together to achieve your financial outcomes is really important. So the term management itself is really sort of a planning and controlling function. Management's defined as the process of planning, directing, controlling, and evaluating people and resources to achieve some established outcome. And in this course, we'll particularly be talking about financial management, which is the part of the manager's job that's concerned with planning and controlling the financial resources. I'd essentially like you to understand, particularly as you start thinking about preparing a proposal, a business proposal or a grant proposal, that firms of any kind, be it profit or nonprofit, they generally have the same three goals in financial management. And so understanding these goals can help you talk to the executive and finance team. They always want to maximize profit. Now, in nonprofit organizations, they don't use the word profit. They usually say maximize revenues or maximize earnings, but the point is the same. All organizations want to bring in more money, revenue or income, then they want to be paying out, right? They want to be in the black at the end of the year. If it's a for-profit organization and it's publicly traded, then sometimes that's called shareholder value, because the owners of the company get they get those profits back, like as a payment to them, either through the value of their stock or as a direct payment. So maximizing profit and maximizing shareholder value is always the number one priority. If it's a nonprofit organization, as many universities and healthcare systems are, then they say that their overall goal is to meet a socially desirable need. Technically, of course, a need for either education or for providing healthcare to a community. But I promise you, underneath that, they need to be making money, because without showing a profit, we would simply go bankrupt. The organization would fold and it couldn't survive. So a big part of that, but sometimes it's actually looked at separately, is what can we do to minimize costs? That's usually the secondary goal, is how can we cut costs? It seems like my whole career, the mantra that I've heard in finance, in healthcare, and academia is more, better, faster, right? We want you to do more with less. We want you to do it better, and we want you to do it faster. And then finally, we want you to do it cheaper. And then the third thing, which you may not be aware of much as a nurse, is that the leadership of an organization usually always wants to maintain or grow its market share. And hopefully you know what I mean by market share. For example, in New Orleans, where I live and work, there's two main hospital systems, right? There's Ochsner Healthcare System, and there's the LCMC system, which was derived from the old state charity system and is affiliated with, the public universities and public services. And so these two systems are kind of always competing with each other because they want to be serving, to offer services to more of the population of the metro area. And that's what I mean by market share. So it's literally the number of people or the number of families that they're serving. They want to either keep it stable or to keep growing it indefinitely. So big three things: make money, maximize profit, maximize shareholder value, maximize earnings. 2, cut costs. Or 3, grow your market share. So as you develop your proposals, you want to think about how you can speak to those needs. If you're asking your leaders to spend money on something, you need to show why it matters. Is it going to help overall make more money? Is it going to somehow cut costs in other ways? Is it somehow going to grow market share? If there are some other outcomes, you need to be able to quantify, to actually put numbers on those outcomes and show what they are and why they matter. Essentially, sound financial management is important to all organizations, no matter what they are, healthcare or academic. And my goal for you in this course is to help you understand and influence the way we allocate resources. So we talked about economics as a broad social science. Healthcare economics just sort of narrows it in a little bit. It is the branch of economics that's concerned with issues related to efficiency, effectiveness, value, and behavior in how healthcare goods and services are produced, consumed, and allocated or distributed. Healthcare economics can help us to understand how people and firms make decisions and behave. It can help us evaluate different options. It can help to inform policy, and hopefully we can use it to promote better health among our communities. A few key concepts that you're going to read about in Module 2 are supply, demand, monopolies, and monopsonies. The supply is like how much of a good or service is available. When we talked about eggs, it's like how many eggs the chickens laid that are available for sale. If we're talking about the nursing workforce, it's how many nurses are available to make their labor available to employers. Demand is how much people want to buy, right? So how many eggs do people want to buy? How many nurses or nursing work hours do employers want to employ? It can also be things like, how many joint replacements that an aging population might need versus how many surgeons or how much equipment is available to do those joint replacements at the supply. So a monopoly is when there's really only one supplier of a good or service. And that's become a problem in healthcare, just like it is in other industries. A good example of a monopoly in the town where I live is that there's only one electrical company, right? So if you want electricity in your house, you have to buy it from Entergy, right? There's no choices. We've had problems when we rely upon a single company. I can't think of the name of it, but the company that produced a lot of normal saline IV bags that was located, the facilities were in Puerto Rico. When Puerto Rico had a hurricane, that supply was disrupted. And so we had a big shortage of normal saline IV fluid bags. So relying upon a single supplier is kind of a recipe for disaster if there aren't plenty of backup systems in place, and can also drive prices higher, right? On the other hand, a monopsony is when there's really only one big buyer for services. And in some ways, we see that playing out now in labor markets. Again, taking you back to New Orleans, there's only two healthcare systems. And so those two healthcare systems really control wages and what benefits are available for nurses and other healthcare workers. Now, in this case, it's not a not a one monopsony. Instead, I would say it's a duopsony, right? But there's only two. But there certainly are communities where there's only one healthcare employer in town. Just like for universities, there's certain areas where there's only one university. And so that university really controls the salaries and the benefits in that area because there's simply no competition. An efficient market is one which we previously said when we were talking about the rational allocation of resources, that it's a marketplace where the prices always reflect available information. So I leave the question to you to reflect on this week. Is healthcare an efficient market? And if not, what makes it inefficient? One thing to think about, and we're going to dive much more into this in week 2, is the fact that we don't have buyers and sellers alone involved in healthcare purchasing decisions. Instead, we have this interesting triplex situation. On one hand, we have consumers or buyers, you and I, who may need or want healthcare services. And then, of course, we have healthcare providers, right? We've got hospitals, we've got surgery centers, we've got doctors, we've got nurse practitioners, but we've got something in the middle, right? And that's the payers. And we're going to look closely at payers next week, but essentially whether it's the Center for Medicare and Medicaid Services, or it's private insurance, commercial insurance, workers' compensation, or self-pay. There's a lot of people in the middle who are influencing the purchasing decisions through regulations or policies or reimbursement arrangements. And so that definitely interferes with either our ability as consumers to have full information, but also the provider's ability to have full information, and certainly interferes with the efficiency of the marketplace and creates extra administrative cost and time and burden. So I propose that healthcare is not a simple and efficient market due to the fact of the middleman, the payers who are in between the buyers and the sellers, and also the fact that we have what's called information asymmetry. So we don't all have the same information. Now, there have been a lot of new rules and laws about price transparency, but so far, at least, it's still pretty difficult as a consumer, particularly if you have an emergent need to compare the services of different providers in different hospitals and find any sort of reasonable information so that you can make a decision about where to go to get something, whether it be as simple as a knee replacement or something very complicated. Um, we'll dive more into that later, but I just kind of wanted to bring it up as an issue. When we have this situation of information asymmetry, then it often results in things like too much or too little of a supply. It results in things like difficult contracts, pricing schedules that are impossible to understand. And there also becomes a way for people to have fraud or wastefulness in the marketplace process. One other concept that I wanted to talk to you about early on to think about is that every choice we make has an opportunity cost, or what sometimes is called an economic cost. And this is what you have to give up to acquire or achieve something else. So, for example, you've decided to invest your money and your time in getting a graduate degree, right? If you weren't spending your time and your money getting this graduate degree, like what else could you be doing with your time and your money? That is, in fact, your opportunity cost or your economic cost. And as you consider alternatives about whether or not to take an action, you need to always think about what's the opportunity cost. What are the benefits or the expenses of acting or not acting, and what are the alternatives? And we'll talk more about that as we get into the business proposal process. Another key concept I wanted you to understand is the time value of money, which you can essentially say one bird in the hand is better than two in the bush. If you talk to your finance folks, they'd always rather have $1 today than two in the future. And why is that? It's because money that you have today can be invested and can be used. And so we say that the present value of money is always greater than the future value. On just a super practical level, I might tell you that if you're going to propose a new program or new service or some kind of piece of equipment, and let's say that thing costs $800,000, your finance people would always rather to finance it over time, saying $80,000 a year for 10 years, than to pay $800,000 upfront. And so you see a lot of purchasing decisions made on this notion of keeping our cash for as long as possible and not letting go of that cash to pay expenses. So time value of money is another important concept, along with opportunity costs to think about. So that was some key concepts. Back to healthcare and economics. What's it good for? Well, it's a tool for solving problems. And for several years, we talked about the triple aim of healthcare, that what we wanted to do was we wanted to increase access to care, we wanted to reduce our costs, and we wanted to, I'm going blank, access costs, improve quality outcomes, improve the health of the population. We now have instead what's called the quadruple aim, and I've summarized it on this slide. Essentially, quality is still important, but that's now defined as improving population health. Reducing cost of the care, still super important, and we've made virtually no headway on it. In the United States, the cost of our healthcare systems is still extraordinarily high. Enhancing the patient experience is now an expansion of what used to be considered providing access to care. And instead, we now talk about motivating and engaging patients or consumers to play an active role in their own care in order to improve outcomes and safety. And then the fourth part of the quadruple aim, and they've used the word provider, but provider can really mean any healthcare worker, including nurses. And that is improving provider satisfaction, because we know that burnout and workforce issues are creating huge problems, not only cost problems, but also other things. And so providing access to tools and resources to address the burden and the burnout of people who are providing healthcare is now an important part of this overall quadruple aim, that we can use healthcare economics to help develop policies and processes to achieve these goals. However, economics is limited, right? It's a science. We can help use it to maximize our desired outcomes. We can get information about what works. What are the means? What are the ends? What are the inputs? What are the constraints? But what economics can't do for us is to tell us what matters to us. It can't tell us what outcomes we desire, and it can't judge what human beings want and what we think is a priority. We have to do that ourselves. We have to express that through the political process to make sure that our voices are heard. And then we can ask them to use the science to make the decisions that are the things that are important for us, our desired outcomes. So economics is a science. Yes, it can help, but no, it can't solve all the problems. There's still human factors to consider. So what have we accomplished today? I hope in this video, I'm introducing you to some concepts associated with economics, finance, and accounting, defining some key terms, and then recognizing what economics can do and what it can't do in order to solve healthcare problems. Here is a list of the references I used to prepare this slide presentation. I hope it's been helpful to you. I've put the slides themselves into Canvas so you can refer back to them, and I look forward to getting to know you through this term. Thank you.